Welcome to Landmark Talks Property, a podcast by Landmark Information Group that covers all things property in short and intelligent podcasts.
Well, thanks for joining us for this episode as we cover the latest trends from our 2026 Q2 Commercial Property Trends Report. I'm Rob Steadman, Sales Director here at Landmark Search, and I'm delighted to be joined once again by Josh Rains, Managing Director at Landmark Geodata. It's great to have you back, Josh. And making his podcast debut with us today, I'd like to give a very warm welcome to the wonderful Luke Parsons, who's the Business Development Director at Landmark Legal. Welcome, Luke, and thank you very much for giving us your precious time today. Obviously, before we launch into the conversation, I'm going to set the scene for this episode's discussion. So Landmark's Q2 2026 Commercial Property Trends Report has recently landed, and it covers the latest trends across England, Scotland and Wales between April and June of this year. The headline picture is one of, a softer commercial property market across Great Britain with, sadly, lower transaction and due diligence volumes, but that's been offset by ongoing resilience in larger scale planning activity. In England and Wales, commercial property activity slowed in Q2, which is unusual, I guess, for this time of year, but I'm sure Josh will put some colour to that as we go through. But lower foreign investment and domestic appetite may have influenced both transaction volumes and values, with smaller transactions becoming more prevalent. At the same time, planning activity continues to tell a more nuanced story. Larger schemes remained comparatively resilient, while smaller planning applications softened as the quarter progressed. So today, we'll explore what all this means for commercial property professionals, investors, developers, and advisors, and what the data may be signalling for the second half of 2026. So let's dive in and explore the key trends from Q2 2026. Well, let's first, get into Q2 2026's due diligence activity. Now, as always, I'll walk you through the key trends in England, Wales and Scotland. And by way of overview, that due diligence activity has remained below 2025 levels across England and Wales and Scotland in Q2, reflecting reduced transaction volumes and a more measured commercial property market. But I'd really like to call on Luke, so welcome again. But from a due diligence perspective, Luke, what does, in your opinion, the Q2 data tell us about the current pace of the market?
Yeah, firstly, thanks for having me, Rob. What it really tells us, I think, is that the market ultimately is still moving. It's just moving more cautiously. So we're seeing report volumes sitting below last year levels, as you mentioned, which does really mirror the broader slowdown in transaction activity. But what is interesting is that the activity has improved as the kind of quarters progressed, with June being stronger than April. So while there are clearly some hesitations in the market, I think it is fair to say that it's not a story of inactivity as such. It's more of a story of selectivity. And from a due diligence perspective, that plays a key role in that. We can see that investors, lenders are continuing to pursue opportunities, but it's fair to say that kind of being more disciplined and selective about what deals that they move forward with, and in an uncertain market as such, understanding risks become even more important, which really does then put back due diligence firmly in the spotlight. So from my perspective, Rob, I think the data suggests people aren't necessarily walking away from deals. They're spending more time making sure that they're the right deals. And our professional services department are seeing a greater focus on the asset quality, resilience, future risk, which is exactly where good consultant-led due diligence really adds that value.
Yeah, absolutely, that's spot on. Thank you, Luke. And if I can bring Josh in as well, I mean, Josh, from your point of view, do you think that this points to, reduced confidence or more of a measured recalibration in market?
Yeah, I think Luke's point is spot on in terms of it's not necessarily a statement of long-term intent, but it's a move to surety and a move to confidence in the transactions and in the projects that are moving forwards. And I think your point there on sort of recalibration and that, I think when we look at the data, it's a sort of, almost particularly with the due diligence activity, a story of two halves through the quarter. the start of the quarter saw particularly low activity, and this was a continuation from what we saw at the end of Q1, particularly in March, and then actually recovery to the point that it was higher than 2025 by the end of the quarter. So what does that really point to in terms of my expectation? One, it's natural that April and March, with its proximity to the challenges in the Middle East, it damaged and impacted confidence in there. So we saw that sort of slowdown and lower activity as that began. As we've progressed, there's been that more cautious progression of activity and progress. And I think one of the telling characteristics which we're going to see through the remainder of this calendar year is what's the particular impact or activity around infrastructure, around energy, and around non-property related assets, and particularly the work that happens around those, because the demand for those is ever increasing. The demand for where they are is potentially going to be influenced by latest changes in government and Number 10 North and some of the investments which they want to be moving around the country. So yeah, I think if I was to look at this and give a headline, I think we saw a tale of two halves throughout the quarter. Slower activity at the beginning of the quarter with a recovery. I want to be optimistic, or a recovery to previous years by the end of the quarter. And I think as we look ahead, the areas of interest from my perspective are going to be how that distribution of activity is spread out. Is it in property? Is it within infrastructure? Or is it within utility assets that are going to drive that overall due diligence activity?
No, agreed. And I've just actually been thinking about last time we came together. I think I'd asked you and Chris at the time to give your predictions. And I did make a note that you were fairly consistent in terms of what your outlook was going to be. So it's nice to see that you are actually a prophet, Josh. It's all coming true. But if we start to sort of move it forward, I guess, and look at commercial planning applications, really interested in, I guess, large planning applications, as you've referenced there, Josh. You know, they appear to have remained pretty resilient. But what's your reading of the trend overall in the planning space?
Yeah, it's a really interesting one in sort of preparing for this content and going through it. I've got my optimistic side saying, I look at all this activity above previous years when it comes to larger applications, and then with that in mind, the sort of smaller applications being at a lower rate. But actually what I decided to do was look a little bit further back and let's take a comparison of 25 to 24, because I remember as we were doing these reports back there, we were talking about the narrative of actually smaller scale planning applications being the activity that was driving a lot of the market. So while on the face of this appears to be resilient, high performing sort of characteristics on the commercial, on the large applications, and lower on the smaller applications, what I actually think we're seeing is a return to norm. So actually it looks strong comparative to a weak year in large applications last year, but actually it's largely on par with what we saw during 2024, and similar, if not slightly slower with the smaller applications. It was a higher performing year last year, and we've seen a slight return, but actually, unfortunately, on that side, actually slightly lower than that. But that's not a trend that we've seen for a long enough time for me to be sort of stamped on that. So actually, we see a resilient position in this market, but I'm cautious to say of an over optimistic, high performing, and actually what we're starting to see is a return to normality from previous years on that side.
So you don't want me to ask you now for what your Q3 predictions will be, or do you want to wait to the end and keep your 100% record?
Oh well, yeah, that would be fine. Look, in terms of my expectations, I think we'll continue to see that trend. I think we'll see a position of larger applications being the dominant force in the market, particularly as the demand for data centers in particular drives a lot of investment activity, as the demand and the forever requirement for infrastructure. These are not things as deeply influenced as property transactions when it comes to national and international confidence. So yeah, my expectations is that we'll see that that stronger catch myself there, that continued performance of the larger applications. I think the challenge will be these smaller applications, and particularly on the commercial property side of things, change of use and those types of applications. How does some of the new policy direction and devolution sort of ambitions start to change the appetite of investment at that level?
So you managed to preempt my my next question, really, which was what you thought was driving the divergence, but I think you've given a fairly substantial answer there. So thank you very much, Josh. That's it's really good insight, and you're absolutely spot on. I think the I guess policy and directional needs and the pieces around data centers and infrastructure at the moment are certainly high on the rise. So it is going to be interesting to see what happens with the smaller planning applications going forward. Right. I guess it's time to put our newest member of the team on the spotlight as we start to look at environmental search activity and how that really has compared with non-residential completions throughout Q2 of 2026. So, Luke, obviously environmental search volumes have remained broadly stable throughout the quarter. What does that tell us about underlying due diligence demand at the moment?
Yeah, I think that's probably one of the most telling indicators in the report, Rob. I think despite the softer transaction volumes, environmental search activity, as you mentioned, remained relatively stable throughout the quarter, which does demonstrate that environmental due diligence is kind of very much key in that transaction process. And we all know it has been for a while. It is no longer seen as a compliance exercise. It is a key part of understanding risk and supporting investment decisions. So when you're looking across the market, as we are in an environmental risk perspective, now whether that is contaminated land, whether that is now flood risk, climate exposure, other environmental risks, of course, but even now it's also ESG considerations. So these all very much continue to be high on the agenda for investors, for lenders, advisors as such. So when the market does become more cautious, I think the requirement for environmental intelligence doesn't disappear. And I don't think it ever will. So you could then look at that from another perspective. You could argue that actually it does become even more important in a cautious market, as when confidence is potentially lower and capital is now being allocated more carefully, buyers want that greater certainty, and somewhat stable search volume suggests that there's still a healthy level of due diligence demand that's underneath the market, and that organisations continue to see that environmental insights very much essential to making better informed decisions. So, and as a bit of a roundup, Rob, I think my takeaway really for Q2 is that caution hasn't reduced the need for due diligence. If anything, it's reinforced it. I think deal volumes may fluctuate, which we've seen across the quarter, but you do need to understand that environmental risks remain constant and that they're reflected in resilience that we are continuing to see in environmental search activity.
Yeah, I think you're absolutely right, and I think it's in times of uncertainty, actually due diligence becomes more and more paramount to give certainty to transactions. So that's really useful. Luke, cheeky of me, I know, but I put Josh on the spot as well. But I mean, any predictions? What do you expect market to do over Q3, or what would you like to see?
Yeah, what we would like to see, of course, we'd all like to see everything back to being strong here. But I think kind of from our perspective, especially in the landmark legal world, I think ultimately delivering that due diligence, that support to clients, and the need for them understanding the risks and supporting that investment decisions is ultimately what we do and what our professional services, we always love to deliver that service. So I think for us to still have that due diligence, and we've seen across the quarter it's increased, I think that's positive. Across Q3, of course, we understand it's summer months, we understand that, but I think we'd like to see that back. And following from what Josh said, I think data centers is a really interesting one. We've had a number of increase of actual kind of supporting firms around data centers, and that's a really interesting one. So I think that was going to develop. I kind of agree with Josh on that over the next quarter, and I'll probably have more to that, or Chris will have more to that next time we're on. So I think it's one that I don't think it's going to change too much, if I'm being honest, in the quarter of Q3, but we'll probably see an increase away from, as Josh said, like the property side, and I think more on the infrastructure, data centres, etc. as that evolves.
Thank you very much, Luke. I guess that brings us to an end of today's episode, and if I can just wrap us up with the main takeaways from the discussion. Obviously, Q2 2026 was a softer quarter for commercial property activity across Great Britain. Transaction and due diligence volumes have remained below the 2025 levels, but as we've heard from our experts today, that reflects a more cautious and selective market. But at the same time, larger scale planning activity has remained resilient, suggesting that confidence is still there, particularly where projects are linked to longer term demand in areas such as industrial, logistics, energy, and of course, has been referenced several times, data center assets. But the divergence between larger and smaller planning applications is one of the clearest signals in this quarter's report. Larger schemes continue to progress, while softer, small project activity has suggested that some investors and developers are taking a more cautious approach. But finally, environmental search activity has remained broadly consistent with 2025 levels. As Luke has discussed, that underlines the continued importance of due diligence, even in a more measured market. So it's a big thank you, as ever, to Landmark Information Group for the insights behind the report, to our panel of experts for providing context, and last but not least, thanks to all of you for tuning in. If you'd like to read our Q2 2026 Commercial Property Trends Report, please visit landmark.co.uk, click News and Insights, and head to the Industry Report section. I'm Rob Steadman. Thanks again for listening, and we'll see you all next time.
Thank you for listening to Landmark Talks Property. If you've enjoyed today's podcast, please hit subscribe. This podcast is for general purposes only. The views expressed are those of the hosts and guests and do not constitute professional advice.